Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, May 22nd, 2023. There is really not very much to be adding over what I presented in the big picture update, and I also the very short Elliott wave update on the S&P and the NASDAQ last evening. Today, the markets truly did trade in a very tight range. I mean, we had a decent move down early in the session, and then we just kind of popped back up. We made a high, and then we sat in a very tight range. As the market now just sits and it waits. I pulled that open a little bit too quickly. So we remain in the exact same position. I did put that 4 in last night, and we're still within the very beginning stages. We left open the potential that we could drop back down, hold back above 41.72. That was achieved. We did not move to a new low. So we're still in what I would call a box with the 42.21 high now, 41.90 or 41.86, 91 actually, on the bottom. And we're just trading in between, biding our time while the debt ceiling discussions pick up again and are now, I'm hoping that everybody has shown up and that they have started discussions for today. We continue to get the banter from the Treasury Secretary from both sides, from we need a deal by Friday, we need to get this done by this date. It's still not going to have enough time to get it through the House of Representatives. Even if they do come to an agreement, it has to be legislated. So in other words, they've got to write it into legislation. They've got to put the terminology in there and then get that all written up, get it out to all the members of the House, get it up for a vote, and then send it over to the Senate, which will take a week and as a minimum to put it through the Senate process of how legislation comes in, how it gets marked up, how it gets marked wherever it needs to be, and then brought to the floor for discussion and a vote. So that's all supposed to happen before June 1st, which, by the way, today is May the 22nd. So next Monday is a holiday. It's the 29th. I don't think that Congress is going to work on a holiday, not Memorial Day, for God's sake, right? So where does that put us? That June 1st is Thursday. A week from this Thursday is June 1st. And the legislative process just takes longer. Even if we have a deal and they don't get it done to where the government can really start auctioning off new bond issues to raise money to pay our bills, well, I'm not sure. Do we go into default? Do they try to hold it off? Does Secretary Yellen actually have a few additional things under her belt or hidden where she can implement for a quick fix for a week or two or whatever that situation may or may not be? So I think they're going to run it right down to the line. And that's if we get a deal where they come to an accord, they come to an agreement, and that deal goes through. All of this remains in the unknown. And should that happen today, we're talking that it's going to happen in the Globex session. The market was also pretty thin today. There was very light volume in comparison to what we have been seeing. Even the zero DTE options weren't really trading all that much today. So things actually have now come down to what we could say, not necessarily a standstill, but pretty dang close to one. The bond market continues to react by moving a little bit lower, and as we get closer to a decision or no decision. So in essence, what I think people are now beginning to put together is they're realizing that, yep, we still might get that pop, that relief pop, that if a deal is struck and we're not going to default, oh, whew, they're going to rally it up. But I believe that we're really coming into a point now where it's like, folks, we're running up to the completion. We're not running out to break out. Well, there's big relief rally because, ooh, they finally made an agreement on the debt ceiling. it just it doesn't make sense, because just because the debt ceiling has been raised does not fix the issues that are underlying and the issues that remain the same. We had Fed governors out today talking that we are likely going to see at least 2 more interest rate hikes this year. So we're still get all this talk, the narrative. They I don't know where they find them, but they stick them on TV or they put them in print. I know, yeah, Fed's going to pause. Fed has to pause. Fed has to cut. Fed has to do this. If they're going to do that, we have to rescue this. It's like, no, it really does start to get a little bit repetitive and a little bit like, what are you talking about? How about the Fed has to get our bills paid? The Fed has to control interest rates, and their number one task is to pull inflation back into line. Well, we're not really getting any closer to that being achieved. We're getting closer to creating more. So it's not going to be a pretty picture, but we are getting closer to reaching a top. And in that process, coming here with the S&P, we remain within minor wave 5, so I'm not really going to open this up. We're still within that, in the finishing stages for a primary B wave. And underneath that, we'll be finishing an intermediate C wave. And underneath that, we'll be finishing the minor 5th wave. So we continue to have 1, 2, 3, and a 4. This and prudent a little bit that we came down during Globex, but actually that opening low held. So we didn't get anything more out of that. And we're now starting back up. So is this a 1, 2? Who knows? Confusion. Market's confused. Market doesn't want to do anything. So here we are. We're now within this period of time. Yeah, see, now. Remember I've been talking about commercial real estate. I know I shouldn't, in the middle of the update, pull open the news, but I see Blackstone meets with lenders on Chicago office building investment it wrote down to 0 last year. And so it begins. This actually is the 1,000-pound gorilla that they've stuffed into the coal mine and is going to start losing weight to equal to its buddy sitting already in the coal mine, is down to 800 pounds. Whatever you want to consider it, it's worthy of a laugh. But they're worried about this debt ceiling, commercial real estate. Again, if we just use the city and county of San Francisco, which we're over 31% vacancy factor, they're not knocking down the doors to go sublease from Salesforce, from Facebook, aka Metaverse, from Uber. Uber had to go and be next to the Warriors in their brand new spanking building, high tech, blah, blah, blah. Well, we're going to be headquartered right next to you, Warriors. Great, the Warriors, they're making money, but Uber isn't. And now Uber has too much square footage. And they're looking to sublease in the brand new building they just moved into, plus the lease they still have in their old headquarters building in San Francisco. This is not getting better. It's getting worse. And we're focusing on the country and our debt ceiling problem, when what we have right behind that, a commercial real estate. And again, I'm just going to say, it's going to brew, and we'll find out about it as it starts to unfold. But there is trillions, and I mean like 22 or above $1 trillion in loans that need to be rolled out, need to be refinanced. Starting towards the end of this year, they got to start putting these deals together because it's going to take quite a while. But these are loans that become due in 2024 and 2025. We're almost halfway through 2023, and now they're getting a little bit nervous because we need to start putting together these loan packages and see if we can find somebody. And yet we're facing a banking crisis. And guess where most of these loans across the United States are sitting? They're not, as granted, some of them, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo, et cetera. But it is the more local regional banks that cover those types of loans. Guess what? Now they can't lend. How do you refinance? How do you do these things? It's going to get very interesting. So while we're all focused on who the United States didn't declare bankruptcy, so to speak, didn't default on its debt, we dodged a bullet. Well, the next one's been fired, and it's heading our way. Back to the S&P, I continue to leave open. We continue to have the market is clustering in terms of resistance, same places. There's no change to that. So just to do a quick review, here in the S&P, I'm looking for that fifth wave to continue to develop. I think that whatever we get, we may get that relief pop, like, whoo, we dodged it. And then I think we can get ourselves up to 42.58 to 60. We got 65 up here. And then our next cluster is just below 4,300. Now, as Dan Ascani was showing us in our trade room this morning and throughout the session, the market right now, as I presented it, can't break below 4170, basically, or that it would really start to tilt towards the top as in. And we have the potential to run up to 4,300. While when we started to check out as to where many of these resting orders were, there were quite a few at 4,300 down to 4,295. That covers that zone. There were many at 4,250, just below and just above, covered this zone. On the downside, 4,175, stacked, and more stacked right there. Hundreds of contracts they will buy at 41.75. Because what happens if it drifted below there, not only does it start to affect the count itself, that was the volatility trigger. That is where a lot of trading firms will have to react, will have to start putting through some hedging as if it breaks below that level. So they're going to stand there and support that level to save their whatever. So that is what was lining up today. So it kept a lid on trading, but it keeps pointing to areas where we have Fibonacci resistance and Fibonacci support. And that's where the market is maintaining itself. Doesn't want to go below that, needs to get up to here. 4,300 will be defended as a level not to break. There'll be sellers after sellers stacking it up right there. So we're in a box. And I believe we still have upside to do. So all of that remains in play. We have our resistance zone. I'll quickly review them right now. We have 42.26 was the previous high from last Friday. Then we have 42.28, 42.42, 42.45. Then we have 42.50 to 58. Then we have 42.63 or 65, 42.74, 75, and then 42.95 to 4,300. Downside, we continue to find our support at 41.86, 41.78, 41.75, 41.72. And then that's it. We start to break. So we're in a little bit of a tight range. Over in the NASDAQ, it's going to basically tell us the same story. We have a whole bunch of nothing. So again, as in the S&P, there is the minor wave 4. We're in that minor wave 5. And within that, we're in the minute wave 5 to complete minor 5. And in turn, then complete the intermediate C wave. And in turn, complete the primary B wave counter trend rally. All of that remains the same. But here we also have resistance levels at 13,975, which would put in a new high, by the way. It's just a Fibonacci level that I don't necessarily associate with completing, but it is one that's used by the market. There are a lot of market analysts that do, and even traders that use 78.6%. So I personally don't, but I will include it and show it. So right now, we are still trying to get up and just equal that 13,960 level that we got to last Thursday at the beginning of the Globex session. But what I can do here is I got a 1, 2, 1, 2. So we're still maybe inside that third, 1 of 3, 2 of 3. We get a 3 of 3 move. We start heading up. And then we get a pullback, and then we finish up. We've got a little bit of a cluster. So again, we have 39.56 to 60. That's just the previous high from last week. And then we have 39.75. And then we have 14,000. 14,000 itself is a nice round number. And I think it will come into play. But above that, we have 14,025 to 43. Then we have 14,079, 80 in that area, and then 14,100. And because it kind of thins out, if they give it a really good shove here, folks, and it were to happen in a Globex session, it could flip. It could move really, really quick. And then we'd be here, and then we'd be here, and then maybe that's all. All through this thing, the NASDAQ has popped a lot harder. We continue to see that today, but that today they were coming in after Google, they were coming in after Microsoft, they were coming in after Metaverse, et cetera, et cetera. And actually, I believe they were coming after Tesla. Up 8, gotta have your Tesla. So again, I'm still looking for upper levels. Now, a little bit different story in the NASDAQ, and that if it starts to come down and breaks 13,794, it has room before it would be disqualified from going up. This fourth wave could come in down here if this is A and this is B, and we drop down in a C wave. It really can, and then still rally. As hard as that is to hear or take, it can happen. The market, in terms of what it would break in terms of a rule, is a fourth wave cannot come in and break into the territory of the first wave. So where would that be? That's all the way down here. Even if I move this one up to here, which I probably could, then, it's going to make it a little bit different. We're talking about 13,500. Right now, we're talking, if I leave it there, 13,435 is where I'd be looking. Below that starts to nullify upside potential and starts to put this as the completion point. But now remember what I've been talking about here within the NASDAQ. It has crossed all the T's, dotted all the I's in what is required of intermediate wave C to complete. We even within it, minor wave 5 has certainly broken above the high of minor wave 3. Now the intermediate wave C has certainly broken above the high of intermediate wave A. So all is beautiful in the NASDAQ. To put a cap onto this thing, put it a little kiss to the upside, and be done. And that's what we're all waiting for. At least that's what I'm waiting for. I'm sure there's still people out there who believe we're breaking out. We're going up and up and up. And that's up to them. So that's about it. I'm not going to drag on to this tonight. So we will continue to follow it. Again, if there's some type of news, it's going to come out once, I believe, Globex is in session. And if you're going to get up and trade it, folks, be really careful. It was thin volume today. Can you imagine what the Globex session is going to look like? It'll be super thin. And if it is a serious enough move, either side, up or down, it could truly get out of hand very, very quickly. That's where I'm going to leave it. Our next update will be on Tuesday, May the 23rd.